with, it's actually the new growth path. There actually isn't really a plan. The plan really actually has to come still, unfortunately. And it's very much a laying out of hopes around job creation in certain sectors. There's been some initial research which we've not really been privy to. So that would be interesting to actually get some sight of. But really it's going to the private sector and saying, please help us actually create these jobs. So really what we'd like to see in the budget is that the minister actually helps provide a much more enabling environment for business to actually create those jobs and to really grow. And so far we haven't really seen that in the actual growth path or even in the president's speech. It's been more kind of, okay, we'll give you a couple of incentives here and there, but overall, at the same time, we'll tighten labour legislation, et cetera, which really doesn't create that environment at all.
Absolutely, and then we've got that push and pull effect playing itself out, Jean-Pierre, because while you're incentivizing on the one hand, you've got these stricter bills looking to be passed when it comes to a labour regulation in the country. How are you reading the scenario and the ability for government to be hitting its target anytime soon?
Correct, and I think one of the incentives, one of the pulls for employment has been the incentive allowances for learnerships. Now those are due to expire in October. Companies like Kelly and Adcorp have benefited from those, and it'd be interesting to see whether they will be extended or new incentives will be put in place, because we need good incentives to offset the high regulation.
Of course, we've got the manufacturing sector standing in the spotlight in that regard when it comes to the job funds that's been created. Looking at something like construction, though, we had interesting comments, and we touched on it a little earlier, Dennis. WHO out with comments on Monday saying that it's promising the kind of noises they're hearing from government with regards to PPPs moving forward. What are you making in terms of the road we're going down in terms of infrastructure spend?
Well, look, I think it is encouraging that they're looking at the PPP route, because I think what's become abundantly clear over the last few years is that the public sector cannot actually deliver on all its promises. And that there's a lot of capacity in the private sector, I mean, particularly on the construction side now with the World Cup projects out the way and so forth. So it makes absolute sense to go that route. And I mean, if you look at something like electricity, that should have been pursued vigorously. Obviously, in 2001, we all know the story around that. But had we followed that route, we wouldn't actually be in the quandary that we're in at the moment. So it would be great if they go that route, but we'll have to have a look and see what's in the detail.
Let's take a look at management of these finances here, because we had positive growth numbers for the fourth quarter filtering through yesterday. We've got great expectations in terms of the kind of level we're going to be seeing our deficit sitting at. But the DA seems to have taken a leftist turn from its normal belt tightening deficit reducing budget proposal, suggesting that maybe this year's budget should provide for a 6% deficit to drive growth moving forward. What's your opinion on that proposal?
I must say I wouldn't be a particular fan of that sort of route, because simply put, we actually on a fairly precarious fiscal path at the moment. I think the government has to actually show some restraint, particularly on the expenditure side, to actually get us back to the kind of 3% level over the next 3-4 years. The worst case scenario is that you get put in the same sort of basket as the Greases and so forth. Now, we are a very long way away from that, but we are going to see public debt rising from below 30% up to about 45% by 2015, which is a dramatic rise. And if you start throwing on additional percentages of GDP on your deficit, that would not look too good. What I'd like to see is that the money already allocated, which is considerable, is spent a lot more effectively. If you look at, one of the reasons why we've had big deficits over the last couple of years has been because of massive wage bills on the public sector side. 17%, 16% each year, which has not really gone towards even employment creation in the public sector. It's really gone towards just bloated salaries.
Absolutely. And of course, in this context, we've got big plans in terms of expenditure when it comes to the National Pension Plan, the National Health Insurance Scheme as well. Everyone's waiting for detail. Whether we're going to get it this afternoon is the big question, Jean-Pierre.
Yes, and unfortunately, we've got quite a few elements of the budget which probably need a higher allocation. and that will probably lead to an increased deficit. So it will be a classic Keynesian strategy to follow, to increase the deficit in times where the economy needs some impetus from government. But that type of strategy hasn't worked that well in the US. So hopefully we'll take some lessons from that and combine the best of the East and the West in our budget for this year.
Of course, looking at monetary policy, it's got dire implications on economic growth. Are you expecting any change to the SARB's mandate, Dennis, where the National Growth Path, for one, actually called for tighter fiscal policy and looser monetary policy to lower borrowing costs and accelerate development moving forward?
Yeah, I mean, the growth path is a bit schizophrenic because they say the mandate of the Reserve Bank is still to keep low inflation. But now they're trying to actually swing the focus back on, rather let a lot of the burden being kept by the budget rather than monetary policy. Now, I mean, if you're a Friedman believer, inflation is always and everywhere a monetary phenomenon. It's not actually fiscal policy. Does play a part in as much as it's monetized, but really it's the Reserve Bank's duty to do that. So I don't expect any changes to the ban, for example, or the mandate. But clearly there is quite a bit of pressure on the Reserve Bank to, where possible, maintain the lowest interest rates while keeping an eye on their mandate. So it'll be interesting to see if something comes out there, but I'd be a bit shocked if something dramatic did come out there.
Of course, we're also expecting in some quarters to see further comments pertaining to exchange control reforms. Your outlook on that front?
Well, it is interesting that the rand has actually strengthened in the last few days in anticipation of the budget, because if there is a loosening of exchange controls, one would expect more capital to flow out of South Africa and a weakening of the rand. So I think that's a key issue that investors will be looking at.
Also, investors looking at the possibility of that super tax on the mining industry coming into play, because we know that the law is there, but it hasn't yet been applied. Last year, Praveen Gordon saying that once recovery is sustainable, government will levy that super tax moving forward. Dennis?
Yeah, look, I'm not sure that the mining companies can bear a lot more, what with all sorts of vagaries around nationalisation and mining rights and all those sort of things. They'd have to tread very, very carefully as regards to that. I mean, we've already got the royalty situation, so I think they'd have to be very, very careful about putting any sort of additional negative signals into the market as far as that's concerned.